Here to dive into industry trends with leading ETF experts, this is ETF Spotlight with Nina Mishra.
Hello and welcome to ETF Spotlight. I'm your host, Nina Mishra. My guest today is Sylvia Jablonski, CEO and CIO at Defiance ETFs. And we're talking about AI and quantum computing today. Sylvia, welcome back. Great to have you with us today.
Hi, Nina. Great to be here. Thank you for having me.
So before we talk about those two very important themes, I wanted to start with your outlook for the broader market. And major indexes are now close to their all-time highs as we are recording this on August 14th. And in fact, stocks have staged such a remarkable recovery from their April bottom, and the Max 7 are once again driving markets higher. So the biggest question for investors is whether this rally can continue. So tell us about your market outlook for the rest of 2025, the areas that you like, where investors should be putting their money to work now.
So it has been quite a ride, right? I think if we think back, April seems so far away, and it seems like it never really happened, given the way that the market has been behaving lately. So we've obviously done a round trip from April, and we've gotten to all-time highs here where we sit. And I think, I've had a positive outlook on markets, and Nina, when you and I spoke, I know that you did too at the time. For some time now, and it looks like the reason why is we did get that soft landing, right? And it's playing out. And not only did the soft landing play out, but for the most part, the macro data looked pretty good. Like we did see some slight slowdowns in the labor market last week, and wage inflation cooling a little bit, but it's kind of like a print or two does not make a negative trend, right? Inflation, same kind of thing. We have to see if there's a little bit of noise around this morning's number. The last read was better. The market certainly liked it. But I think broadly, we have a strong stock market. Corporate earnings are just well above, I think, most people's expectations even, right? You have 90% of the names or so have reported, and 80+% have beat on EPS and on revenues, and the combined growth rate is something like 11.3 versus 10.7, kind of like depending on which analyst stats you use, but it's arguably positive. And so I think that you've had this season of like AI is not just driving demand, but also profitability and expansion across all of these different companies that are reporting. And I think it's a combination of, strong consumer market-friendly policies, a lot of buying on the dip from April, soft landing, and this hope of, I guess, rate cuts and no tariffs disaster, and that's what's kept the market going. So, to answer your question, like barring some existential geopolitical event which can happen, or a tariff event which can happen, I think the market otherwise is poised to perform.
Excellent. So you mentioned earnings being better than expected, and particularly the tech earnings were much better than expected, the second quarter earnings, and 6 of the Max 7 companies have already reported their earnings. The most important company, of course, in the world is yet to report. And investors closely watch all these results, Max 7 results, because of the outsized weights in the indexes, as well as now the future of the AI trade. And the results, they clearly showed that AI race continues to heat up and the trade is here to stay. So you launched an AI-focused ETF recently. Tell us about this ETF and what inspired you to launch this ETF.
Yeah, so we actually have 2 ETFs. So one is the quantum computing ETF, which has been around since 2018. And that's really, focused on supercomputing, AI, machine learning. It's really that, our first foray into the idea that AI would be the future of the market. We launched that one, 7 years ago now. But the only reason I mentioned that one is just because of the kind of like the scale of interest that we've seen on what we're talking about here, this topic, AI. Just in the past few months, we've seen 600 million of inflows, up to close to 2 billion in assets in this fund now. And so investors are really, grounded and interested in their commitment to invest in AI. And so the reason we launched the second fund, which was AIPO, and that's the AI Power ETF, is, partially just because of the pure interest in AI and machine learning. But we started thinking that, this rapid adoption of AI is creating this unprecedented surge in global energy demand, right? Particularly from these data centers that are powering these AI workloads. And if you think about it, like the amount of electricity usage that is needed to get this to keep going is just massive. And so, there's a lot of projections out there that we're talking about 165% of increased need for energy in the next couple of years. It's a multi-decade opportunity for these companies that are involved in power generation, grid monetization, energy infrastructure. And so we thought to ourselves, like, what else is there in AI besides NVIDIA and AI, right? And the chip companies. And it's really this idea that you're going to have these secular tailwinds driving growth in AI power consumption. And so we launched this ETF around just around that, really, to give investors another option to benefit from the AI super cycle.
Excellent. So from the results and projections, we saw that the four hyperscalers, Amazon, Meta, Microsoft, and Google, they plan to invest almost $400 billion over the next 12 months. And that would be primarily on AI infrastructure. Of course, a significant portion of that spending will go to NVIDIA for its AI chips, but a lot will be spent on infrastructure as well, because these AI data centers, they consume massive amounts of energy. So I looked at the top holdings in your new ETF, AIPO, and it really focuses on the energy infrastructure. So NVIDIA is one of the top holdings, but you have to scroll down a little bit to get to NVIDIA. The top holdings are GE Vernova, which is an energy company, Eaton, which is a power management company, and Quanta Services, which basically is a provider of energy infrastructure solutions. They also help build transmission lines. So talk to us a little bit about how holdings are selected and weighted in this ETF.
So basically what we do is we're looking to seek the companies that are most invested and, kind of like partial to the exploding AI consumption, right? And so we're looking at natural gas producers and pipeline operators, nuclear energy operators, renewables, grid infrastructure, companies that have like a high moat advantage, companies that are looking at capacity and expansion and higher, are going to have higher pricing power because of all this. And, what we can do is put all of these names, you mentioned some of them too, like you have the pure plays in there, like the like Quanta Services, Constellation, NextEra, and you can blend them with the chips, because chips are also part of the infrastructure, and blend them into an ETF where you're getting exposure to the top AI power names, essentially, for this space.
So tell us how this ETF is different from many other AI-focused ETFs which are available to investors. So there are some investors that focus mainly on AI chip providers, and there are others which focus on the entire value chain. So tell us, how is this different from all other ETFs?
Yeah, sure. So I think a lot of the ETFs, they have all of the Mag 7 names in there. They might have some of the most popular semiconductor names in there. And so what this ETF does is, like, it's really looking to diversify the broader spectrum of AI and power, basically. And so, we're looking at companies that have at least 50% of their revenue from power generation and electric grid equipment. Again, that's things like energy storage, uranium mining, decentralized energy technologies. We're doing, a tiered weighting system where like 50% of the total weight is for companies that are also in grid equipment. And then, the other half of it is AI hardware, data center operations, construction, engineering, and utilities. And so it's really meant to pick these pure play AI power types of names. And market vectors are index providers essentially rebalancing this quarterly, and they're just making sure that, as this market evolves and shifts and you have these pure plays coming into the market, again, around grid and power generation, energy, data centers, and AI, the ETF will reflect that. And so that's pretty different, because I think a lot of the AI ETFs out there are more like Mag 7, top semiconductor centric, and just don't go into the nuts and bolts of it as much.
Okay, very interesting. And let's talk about quantum computing now. And these are basically related themes. And you mentioned, you talked a little bit about your quantum computing ETF, the big one, QTUM, which you mentioned has now close to 2 billion assets. And I looked at the performance. This is up about 60% over the past year. So very, very impressive performance. And quantum stocks have actually been in focus lately because investors, they are trying to speculate on the next big thing in technology after AI. So tell us, do you think that quantum computing could be the next big thing after AI? And also tell us a little bit about this ETF.
The quantum ETF is actually something that launched our company, right? So it was our flagship ETF, and it was launched back in 2018. And around that time, we had thought that there's going to be this multi-trillion-dollar transfer, 60, 70 trillion of wealth going from baby boomers to, kind of Gen X, millennial, Gen Z, alpha, beta, and beyond, right? But this shift is happening. And, even at the level of Gen X, like there's so much kind of retail trading and interest in the markets and interest in trading, one's own account. And then the further you go along in the generations, it almost becomes like completely self-directed, right? And so we thought to ourselves that this crowd that is really taking control of their own finances and investment management, they're going to think, what do they care about? They care about the future. They care about not so much the classic tech ETFs, but what is the future of technology? What does that look like? And back then we thought, well, that looks like AI and supercomputing, right? And so we came up with this AI, machine learning, and supercomputing ETF, and it was really meant to, be the best way to gain access to that sector. And we were pretty early, nothing happened for a while. It was like crickets for a while. And then you had this like Microsoft ChatGPT moment. And meanwhile, the ETF is performing great. Those, a lot of those names are performing great. And you had this ChatGPT moment, which really brought, AI and quantum into focus. And so that ETF basically has around 71 companies investing in quantum and AI. It's a diversified access to a pure play quantum firms and AI tech players. It's really meant to give investors access to both those new up and comers or smaller companies that are not yet profitable, whether it's like a Rigetti or a D-Wave or an IonQ or quantum computing company that are like getting towards that point, but they're also starting to scale and get these contracts with hyperscalers. So you're getting the juice of the pure play names with the ballast of the Microsofts and the NVIDIAs that are deeply invested in quantum computing. And, the great thing about that is when you have a market crash or some negative, press or headlines around quantum computing and your pure plays take a hit, the ETF doesn't, because it'll have kind of those, some of those larger, more established companies in the space doing well. So a great example is when, you kind of saw the 30-40% pullback of quantum computing stocks. The CTF was down like 5% around that time. And, it participates on the upsides for sure. So yeah, I mean, basically you're getting this exposure to the small cap startups, the mega caps that are leaders in the quantum space. You're getting exposure to, quantum initiatives, government spending, the future of technology, and all of this within that ETF.
So I really like this ETF, and I have written a few times about this ETF because I believe in quantum computing, but it is still very early to predict winners. And so a diversified approach via ETFs, and particularly this ETF, makes a lot of sense. But you also offer some leverage ETFs that focus on those pure play quantum computing startups. And you also offer one ETF which provides 2x exposure to, I think, 3 or 4 quantum computing stocks, pure play quantum computing stocks. So in my view, QTUM is the best way to play the theme, but I do understand that there are many tactical traders who prefer to use these leverage vehicles to trade these highly volatile stocks. And these stocks can swing dramatically. You talked about one. And sometimes they move 40-50% in a single day when there's a big news in either direction. So I was interested in your thoughts on investing in this theme and how to use these ETFs.
Sure. Yeah. So I think you made a great point. So for the buy and hold investor who is looking for, a position that they can put into their portfolio for, that until the end of time and have exposure to quantum computing and not so much, and not have to worry so much about things like rebalancing and leverage, quantum is the right choice, right? For an investor who is more of an active trader, is actively managing their portfolio on a daily basis, and kind of has the expertise around levered and inverse ETFs, meaning understanding that they have risks, right? That for periods longer than a day, they could lose money. If there's any kind of intraday, intra-time period volatility, range-bound market activity, those funds tend to lose. And, trending markets, essentially trend is your friend, we always say with these ETFs, right? And so it's really for that investor, like knowledgeable investors that are monitoring portfolios frequently, but have high conviction on the sector. And so if you have an upward movement for a short period of time in a stock like IonQ, Rigetti, QBTS and Qubit, which are in this ETF, then you get a target 2x exposure to that, and so you can essentially enhance your returns in a short period of time. And also the same thing with the single name leverage stocks. It's really for, again, the active trader, right? The active monitorer that is understanding of the risks of these products. But what it helps you do is really gain leverage exposure and enhance your exposure to a particular stock that you have high conviction in for a short period of time and benefit from the, multiplication on the beta there.
Great explanation. So as you mentioned, these are intended for tactical traders with high risk tolerance who are watching the market very closely. And probably you are also watching how your products are particularly these leverage single stock products, how they are being used. So are they being used as they are intended to, or do you think that some investors just buy them and hold them for a long time, forget about them?
I think that the messaging, and Nina, you and I have been talking for a really long time, and I think that there has been this transition since we first started talking about these funds, right? A decade ago, the information it was out there, but I think it was, it was more in line with like risk disclosures, and, certainly all of the right legal framework was there for different companies and things like this. But now you have ETF companies that really made huge efforts to go out and educate about the risks and to make sure that the risks are clear. And I think retail investors, they engage in social media, they engage in, podcasts, they engage with their brokerage firms amongst each other on X. And you kind of see people now talking about the risks of these funds and who they're for and who they're good for. So it's like a combination of, regulators, platforms, ETF companies, retail themselves, doing a lot of hard work to get the information out there. And I think that investors now do understand that it is, essentially a product that has to be monitored, because, you can see that if you have a trend for a really long time and all of a sudden the market turns the other way, your gains can come away from you pretty quickly. And so to answer your question though, it's been a 10-year, more or less, like prior to this year. I mean, we've just had this decade plus long bull market, give or take some pullbacks, right? Short pullbacks, if we want to call them, corrections and resets and things like that, shorter than, we had been used to anyway. And during that, I think like prior to 2022, if you looked at some of the tech and bank and things like this, levered ETFs that were held for, or not held for years, but if you ran a performance report over the years, the performance was very positive, right? And so I think that there were sophisticated traders and managers out there that did hold them for longer than a day. But what I would say is, again, like these are people who are looking at that position every single day and making that call every single day, not necessarily set it and forget it, right? And so I think the message is still the same. You might have a view that the market's going to trend upward, but you also have to have a view on volatility, and you also have to have a view that, a turning market, a market that will shift size on you could impact your performance pretty quickly. So it just goes back to that active monitoring, active trading, but they can be held for longer periods of time. I just think you have to make that decision.
Very interesting and excellent stuff as always, Sylvia. We'll have to leave it there, but always fun chatting with you. Thank you so much for joining us today.
Thank you so much for having me. Have a great day.
That was Sylvia Jablonski of Defiance ETFs. Now let's recap the ETF tickers. So we talked about the AI and power infrastructure ETF. The ticker symbol is AIPO. We talked about the quantum ETF, the Defiance quantum ETF. The ticker symbol is QTUM. Now, if you're an active trader and want to look at the levered funds, Defiance has some 2x ETFs that provide exposure to these pure play quantum computing companies. So they have one which provides 2x exposure to Rigetti. The ticker symbol is RGTX. 2x exposure to INQ is IONZ. And as I mentioned, they also have an ETF which provides 2x exposure to a basket of pure play quantum computing stocks, currently INQ, Rigetti, QBTS, and QUBT. Thanks for listening. If you like our show, please leave us a rating on iTunes or wherever you get your podcasts. Make sure to subscribe so that you do not miss any episode. If you have any comments, questions, or suggestions, please email podcast@zacks.com.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.